Folks, today I'm going to talk about some other stocks that are falling out of favor other than tech stocks. Now, a few days ago, I did a video on NASDAQ stocks that are losing relative strength and directional momentum, and we received tons of positive feedback and questions relating to the financial sector. Now, the financial sector has been lagging behind the overall market since February, and over the past 3 quarters, the only sector to sag more is the energy sector. There are several reasons that's the case. Bank stocks are falling because the Fed has capped their dividends, suspended buybacks, and the Federal Reserve took a tougher than expected stance on bank shareholder payouts in the latest round of stress testing. When cyclicals do well, financials move higher, but don't expect them to outperform or make serious gains until the economy shows real signs of rebounding. Ultimately, bank stocks need is first and foremost, they need higher interest rates. The second thing they need is business activity to pick up because they make money on lending. And third, they also need people to make their loan payments. According to the Health Association, it looks like COVID is going to stay with us for some time, or till about 2022. And that means plenty of people are going to be out of work, especially when you consider the jobless claims and unemployment is at the highest level we've seen since the Great Depression. Now, it may be a time to step back from the financial sectors for a bit longer, or conversely sell them short. The first stock on my short list is Citigroup, ticker symbol C. It's a global financial service company. It provides consumer, corporations, governments, and institutions with a broad range of financial products and services, including consumer banking, credit, corporate, and investing banking, securities, brokerage transactions, and wealth services. The 3-year return has been terrible, 37% negative. EPS growth versus previous quarter, negative 52%. EPS growth versus previous year, negative 72% growth. The stock has negative earnings estimates over the last 3 quarters. Technically, shares are trading at a multi-month low, and I'm expecting further weakness to move in, especially if the overall market decides to trade lower, which is very possible. Excuse me, I've got the hiccups here. The sentiment on blue chip stocks is weak, and the sector is trading below the 200-day line, which means there's increased vulnerability, and unless there's a major upside surprise coming our way that's totally unforeseeable at this time, the odds are strong that the stock will continue trading lower once again. The second financial stock that I'm fading is Lincoln National Group, ticker symbol LNC. Lincoln National Corporation. It's a holding company. Through its subsidiary companies, the company operates multiple insurance and investment management businesses. And you might have guessed it, with the economy taking a bath, individuals and businesses are spending less on insurance and wealth management, which is how this company profits. 5-year return, negative 30%. Earnings per share growth, lousy versus previous quarter, negative 56%. Earnings per share growth versus previous year, negative 58%. Earning estimates, they're not flattering. And 5 analysts are suggesting that the stock is on hold at this time, which is not a positive sign for short-term growth. Technically, shares continue to trade below their 200-day moving average, and I'm anticipating increased weakness, especially if the economy takes a bit longer to stand on its own 2 feet, and that looks like a real possible scenario at this time. Hope that helps. Folks, the world's #1 pre-market expert, Tom Busby, and I just cracked an all-new style of trading. We've developed a way to spot which stocks are likely to deliver the largest gains every single day before the 9:30 a.m. opening bell Eastern Time. It's giving everyday traders the chance to earn up to 1,139.67% on their money. That's a huge advantage. And if you haven't seen our presentation yet, click on the link below at the bottom of this page to watch it now.